If I had £1,000 to invest into a dividend growth portfolio, this would be it. The first company is Main Street Capital. They currently pay an annual dividend of 6.8%, which is paid monthly. In the past year alone, their share price is up 36%. Over the past 10 years, they've had a dividend growth rate of 2.9%, which is a bit low, but as they already have such a high dividend yield, this is to be expected. The second company is MasterCard. Now, MasterCard only pays a dividend of 0.48%, but it is growing at about 20% year over year. And in the past decade, its average annual growth rate of its dividend is around 35%. I expect this to carry on at the current rate, and before you know it, that dividend yield will be over 1%. The third company is Visa. Similar to MasterCard, they have a starting low dividend yield, but again, this is growing rapidly at 20% per year for the past 10 years. I think Visa and MasterCard are two of the best companies in the world and a great addition to your growth dividend portfolio. The fourth company is Realty Income. The stock hasn't performed the best in recent times, but it's still paying that monthly dividend, and it pays a 5.82% dividend annually. If you're a dividend investor who likes cash flow every month, then this is a great addition. Next up, we have McDonald's. In my opinion, McDonald's is one of the best dividend growth stocks, with a dividend of 2.2%. It is paid out quarterly. Next up, we have the biggest bank in the world, JP Morgan. A dividend yield of 1.77%, and the stock up over 50% in the past year. I think this is a great addition to your long-term portfolio. There is quite a lot of risk associated with banks, and they're not necessarily the best type of stock to invest into, but if you think the US economy will do well, which I think it will, then JP Morgan is a great addition. Just across the border, we have another bank called Bank of Montreal. They have a dividend of 4.36%. They are one of the oldest banks in Canada, being over 200 years old. Next stock is the first UK stock, and that is Greggs. They pay a dividend of 2.9%. Personally, I think Greggs is one of the best UK businesses to invest into. The profit margin isn't necessarily the best, but whenever you go to Greggs in the UK, they are always packed. Next up is PepsiCo. PepsiCo is what's known as a dividend king, as they've been successfully increasing their dividend for the past 50 years. Currently, they pay a dividend of 3.71%. Their dividend has grown an average of 7.8% in the past 10 years. I do think Pepsi stock is currently undervalued and a solid buy right now. Next up is the tech giant Microsoft. With a dividend yield of only 0.75%, this isn't going to pay you the most. I think this stock appreciation will make up for it. Next up is one of my favourite dividend-paying stocks, American Express. Share price has increased 46% in the past year. They pay an annual dividend of 0.9%. American Express are currently growing their dividend at around 9% per year. I only see this continuing going forward. Next stock is probably the riskiest one in this portfolio, and that's Novo Nordisk. Currently pay a dividend yield of 1.61%. Now, medical stocks can be volatile to invest into, so if you're someone who doesn't like to see much fluctuation in your portfolio, then Novo Nordisk might not be for you. But I do believe it is currently undervalued, as I've mentioned in my previous videos, and it's trading at a very attractive valuation. Another stock that I believe is currently undervalued is ASML. Currently pay a dividend of 0.88%, and over the past 10 years have a dividend growth rate of 35% annually. I expect that dividend to increase rapidly over time. The final company in this portfolio is LVMH. They pay a dividend yield of 1.9%. They own a lot of the luxury brands such as Dior, Louis Vuitton and Moet. This is how I would allocate the £1,000 between each company. And then these are some of the smaller positions with 5% allocation. Excluding dividends, this portfolio would give you an average return of around 12.5% per year. Historic performance isn't an indication of the future, so make sure you do your own research before investing. If you enjoyed this video, make sure to follow my page and double tap the screen.